Welcome back. Continuing with corporate conversations, the management of SBFC Finance joins in to discuss the road ahead for the company. Mahesh Dayani, who is the executive director at the company, is joining in. Mahesh, good morning. Thank you for joining in. I'll get straight to the point because we're running out of time here. But what's driving the pressure on your credit costs this time around? Because your collection efficiency has also declined on a sequential basis. The early delinquency pool is showing an uptake. Is there a specific segment or a specific region that is causing this? And do you see this normalizing over the next 3 quarters?
So there's been almost 100 bips what we've seen in bucket one. And that's something that we had called in pretty early. We called in pretty early last year that we see stress building up and building up more in particular pockets in geographies and towards the smaller ticket segment. Having said that, I think we were pretty much prepared for this particular outcome, and that's the reason we had guided that the credit cost is going to be slightly elevated. But if you look at our overall matrix, so you will see that our overall growth in terms of assets was close to around 7% on a quarter-on-quarter and 30%. But the pre-provisioning operating profit, which is your operating profit, grew more than what your assets had grown, so which grew by 9% and 34%, which means that at an operating level, you're able to price your assets well, you're able to borrow reasonably well, and you're sweating your distribution. Now, what are we doing with the enhanced contribution that's coming in? We are going to fortify our balance sheet and ensure that we prepare for the worst possible outcome by improving our coverage and providing more in various stages. So we feel that it's part of the routine, it's part of the cycles that we've seen in the past, and we're not really losing our sleep over it.
But your credit cost guidance has been raised marginally. From 1%, you're now at 1.1 to 1.15%. That's correct, right?
Yeah, so we had said that it's going to be 1.1, and I guess we've landed at 1.1. The way we are now looking at it, we have guided for anything between 15 to 20 basis points from the current level.
From the current level? From above 1.1%, it should be higher. Above, it could be 10 to 15 basis. What about AUM? I mean, it's been growing healthily, 30% up on a year-on-year basis. And I think you spoke about a 5 to 7% increase on a sequential basis in AUM. Yes. What gives you that confidence? What's going to be driving it? And what's the outlook on yields? NIMs.
So we've been guiding for 5 to 7%, I guess, for now more than 9 quarters. Our guidance hasn't changed. And the confidence is largely because of the large distribution that you have. You may have some pockets of inconsistencies which may come in. We've already budgeted that close to around 15 to 20% of the distribution where we might have to curtail. But the balance, 75 to 80% of the distribution is well sweat and will continue to grow. And that gives us the confidence that your 5 to 7% number is going to remain intact. So if you look at our quarter numbers, we were close to around more than 800 crores in disbursal. Even if we were not to grow and we tighten all our filters in terms of underwriting, we will still grow by 20% on disbursal and more than 25% at an AUM.
One final question, Mahesh. You mentioned you're not losing sleep over the rise in credit costs, but is the stress that is building up coming from the new loans, or is it coming in from the legacy book? And what are the underwriting measures that you are undertaking currently? Are you strengthening them further? Tell us more on that.
Yeah, so if you look at our customer acquisition that has happened over the last 4 quarters, you will see that customers with a score of more than 700 have gone up by 200 basis points. Now, almost 87, 88% of our customer acquisition have a score of more than 700. We might end up tightening that further and probably be leaning more towards 90%. When we talk about delinquencies, it's not 90 plus. What we talk about delinquencies is that if anyone who skips a single EMI is counted as a delinquent customer. There are some pockets, early delinquencies, but we've seen that happen in the past. I think close to around 18 months back, we went through the same cycle because of some pockets in some geographies. But it's reasonably fair to assume that we will be able to cure it and then pull it back. So that gives us the confidence that it's not going to worsen from where we already are.
We'll leave the conversation here. Thank you very much for joining in. SBFC Finance now up 3.5%.